Ladies and gentlemen, I wanted to show off the actual financials behind SoFi Technologies so then people can actually get a better glimpse than rather than just looking at the actual presentations that might only show one metric, maybe two metrics at most. So, why don't I just get into it? First off, I wanted to show this members, right? Comparatively to just the regular chart that they show us, maybe growing, 642,000 new members. At least this way, we can see how much they're growing on a quarter over quarter basis, year over year basis, and then sort of break it down. I'm just showing you guys from Q2 of 2023 and forward. So, 1 year gap. But let's go ahead and go through. So, as you can see, products as well also starting to re-accelerate up to 8% quarter over quarter, almost adding nearly a million new products or 3.3 million new products year over year. If you actually look going through any of these other quarters that we've had, it is the highest amount. Although being it, the lowest year over year percentage, it's the highest amount total in terms of new products. Products per member, this is sort of the first metric that you're not going to be able to derive just from SoFi, but if you just divide out the products and members, that you'll actually see that it's pretty much stable quarter over quarter from Q1 to Q2, and nowhere near where it should be around the 1.5. But you know what? Hopefully they get there. They are anticipating that it'll get back there eventually. Financial services to lending ratio. This is showing off the amount of products that they have that lean towards the financial services division versus the actual financial services division. Lending versus financial services. So here's the total amount of products that they've ever given out in terms of home loans, student loans, and personal loans, nearly 1.8 million. But on financial services, we've already breached 10.9 million, almost 11 million. And that is accelerating quarter over quarter. You can see 645,000 the quarter before, 864,000 this quarter, and a ton of new lending products as well. 81,000 new lending products also signed up this quarter. And lending, even if you see the percentage of new products that they signed for lending this quarter was actually 8.6% higher than the quarter before, but not as high as the 10% that they've seen. So the percentage of total products that are lending continues to decrease. Opposite for financial services, that is climbing on both sides here. Decreasing quarter over quarter for new products, increasing for total products. Technology platform. This has been very exciting. The actual amount of growth that we've seen in the product side. Okay, 7.5 million new members. Absolutely amazing. But that's sort of where the good news ends for the SoFi technology division. Another good way to look at it is year over year. 12 million added back then, starting to tick up into 14 million, then 24 million, now 29 million year over year. That's a freaking amazing amount of new members and starting to get back on track to those early 2021 years as well. So absolutely great. 22.5% year over year growth. But we'll get into the, all the revenue and everything like that, where it sort of starts to fall off. Now, personal loans really re-accelerated this quarter. Last quarter before, we thought we were going to get, maybe potentially 50,000. It was only 38,000. This quarter is nearly 70,000. Okay, so increasing is a total percentage of new products and total percentage of total lending products as well. Overall, absolutely great. I'll let you guys pause and go through this information because we have so much more to get through. Same thing with home loans, real acceleration in home loans to 1.4 thousand. Okay, much larger percentage quarter over quarter, and the percentage of total products is still extremely small, but it does make up for a larger percentage of overall revenue. All right, student loans, very much the same thing. We did 2,000 the quarter before. We did 10,000 new personal loans this quarter. You're going to see some very interesting things here that I'm going to try to dive into for you guys. But overall, this is the statistics that we're seeing for student loans this quarter and the quarters that we've seen previously. SoFi Money, this is their checking and savings account product. We really broke out in Q1 of 2024, skipping the 400,000 new member mark. And that's is seemingly continuing in terms of this really high level of growth, 418,000. It wasn't 73% of new products like it was last quarter, but it still was 44%. Absolutely, stunning. The percentage of all financial services products that end up getting into checking and savings, 39%. Okay. Very, very high. In fact, I think it's the highest in the company history, even going past just this year. SoFi Invest has been quite interesting. They rolled off many inactive accounts, many accounts that had to do with crypto. That has, finalized. They're finished with that. Now it's back to growing more active accounts that are actually in industries that we're dealing in still. So 100,000 new members that, brought up the total amount of new products. SoFi Invest made up for 11% of that. Okay. 2.3 million. Credit cards, much slower than expected, okay? We were expecting some level of acceleration this quarter, quite the opposite. Only 6,000. So percentage of new products wasn't even 1%, and it continues to be a smaller percentage of their total product base. However, they just announced 2 new credit cards. We should see some level of turnaround in this in the next 2 quarters. Referred loans, this is the loans that they deem too risky, or maybe they just don't want to take the loan on, that they give out to another financial institution that's willing to take a riskier loan. That actually increased. Great news. SoFi Insights, this is their financial tracking tool. So this actually increased to 320,000 new members. We've seen it higher than this. It dipped down for a little bit. Glad to see that wasn't a trend and it's climbing back up. Good news. SoFi at Work is their employee benefits programs for other companies. And this also took a large tick up to 7,000, making up for a larger percentage of total products outstanding. Good news. All right. Now, total revenue. You'll see that guidance is actually playing a part here. They didn't talk about any guidance in terms of members or anything like this, but for revenue, they did. So in the midpoint, it's about 635 million, or about a 6% increase quarter over quarter, nearly a 20% increase year over year. Whenever looking at the quarter previously, the one that was just reported on, we got roughly 600 million in net revenue, which was down quarter over quarter, but up year over year. Good stuff. Now, revenue per product actually went down slightly to 58.90. I want to show you guys some things. So lending is slightly decreasing on revenue per product, okay, down to 190. It's still very, very consistent considering how much money they're actually flowing through this business. Where on the other hand, financial services is climbing drastically. $12.40, a year prior to now $16, and they expect that that's going to drastically increase just throughout the year. So the next 2 quarters, expect that this might even get up to $18 potentially by the end of year, maybe even more. But overall, this is the lending division, and this is financial services for revenue. You guys can pause it at any time and break that down if you'd like. Technology platform revenue was quite interesting. So this is where, maybe the news is not so positive anymore, okay? That there was some significant growth, 12.5% quarter over quarter, 21% year over year. Now we're getting into 9% year over year, 1% quarter over quarter. Not very exciting. Okay. Percentage of total revenue continues to decrease. And now it's less than 16% that we are reliant on the technology platform. And the idea that this is some amazing part of their business that is making them a ton of money is just fading in the eyes of the people who are looking at this company for the first time, right? So revenue per technology account, because they are adding like 22% new members this year, but only increasing by 9% in revenue, it's actually decreasing on a revenue per technology account, which is quite surprising considering that also factors in Technisys, which does not add to the account side. So there should actually be some pretty artificial buffs to revenue per technology account, but we're just not seeing it quite yet. Now, they still do have expectations to grow this not only for the rest of the year by like 18% and then continuously up by 25% the next year, but it's just not represented in this quarter specifically. Now, corporate revenue is quite interesting. This should be negative. In fact, SoFi has even guided for the idea that it could be anywhere around roughly negative 20 million for the foreseeable future. I mean, on a per quarter basis. But there was some exceptional quarters where they ended up. I think this quarter they wrote off like $59 million of old loans and everything like this. The sold convertible debt, this sort of stuff that actually ended up boosting this number. But that's starting to head back to normalcy. So don't expect that the corporate or other revenue is going to make any sort of substantial beneficial changes to their revenue. It'll be a little bit to the negative, but it's perfectly normal. Now, in these next roughly, I don't know, eight rows here, that what we actually see is contribution profit and contribution margin. So contribution margin for lending actually started to decrease from the highs of 64%. It's even been higher than that previously, but it's a pretty good sign. But overall, we're still making a ton of money from lending, and that is going to continue to stay around that 60% mark. They don't expect that it's going to drop much lower than that. Financial services, however, is just absolutely booming. A year ago, this was still a negative business for them, essentially bringing them a loss of $4 million from this segment. The checking and savings account has absolutely bumped everything up. And then we made $3 million, a contribution margin of nearly 3%, then 18%, then 25%, and now this quarter, 31.4%. Just an unbelievable expansion in their margin, up to $55 million in total contribution profit. And that's on top of the fact that their SoFi Invest and SoFi credit cards still brings them in an annualized loss of about $100 million. They do believe, management believes that is going to turn into a profit generating side of the business, almost akin to the checking account side. So imagine what happens whenever the invest platform, credit cards, and the checking account are all bringing in this amount of money that is leading to essentially not just $55 million, but the checking accounts are probably bringing in roughly $150 million of contribution profit because it's covering the $100 million loss. Sorry, no, it's about 25 million for each quarter. My bad. Not 150, more like 75 or 80 million for the checking account this quarter. But if each one of those can do that per quarter, that's unbelievable, and the margin's going to expand like crazy. Now, this cumulative losses is just something that I track that ends up showing how much we ended up paying for the overall platform for financial services, which actually got to a loss of $467 million is how much they paid into this platform to get it up and running, which is now starting to turn around as we make profits to only negative $346 million. That'll continue to head positively as long as they keep printing those juicy contribution profits. Now, overall, the business continues to bring in a ton of money on the contribution side. So this is excluding a lot of, some of those non-GAAP expenses. But the contribution margin is something that you want to track very closely. We don't want it to dip much lower than this. We want to keep it up in the high 40% or even above. Adjusted EBITDA, very exciting. I don't know why it's this is quarter over quarter. Yeah, so quarter over quarter, it decreased a little bit. Year over year, still up 80%. And they expect for the next quarter to go to 162.5 million. So that'll be a quarter over quarter increase of nearly 18%, up year over year, roughly 65%. And don't forget, margin of nearly 26%. And they've never missed this. Okay. They've always beaten expectations, even on the high end, let alone the midpoint. So I expect anywhere between probably I haven't broken down all the numbers yet, but we'll probably see somewhere around 180 million, to be honest, because that's how much we always beat expectations. Net losses, net income or net losses. We were a non-profitable business that has turned into a very profitable business, and year over year next quarter is going to bring in somewhere between a $90 million difference from net losses to net income. Okay. That's going to bring in a net income margin of 6.7% next quarter. And also, guys, remember, this is going to mark 4 consecutive quarters of profitability, which is going to put this stock in the eyes of a ton of new investors. So very exciting there. It's going to write off this quarter and replace it with this quarter, $42.5 million. I think that next quarter is going to be a very big deal for SoFi. SoFi continues to dilute shareholders. That's normal. Okay. We're not expecting that to start trending in the other direction right now. This is just a basic earnings per share. It's just the way that I've calculated it based on dividing the amount of income versus how many outstanding shares there are. Gets us to, 2 cents this quarter, regardless. Okay. Stock, like this is not diluted. Anyway, stock-based compensation did trend in the opposite direction from last quarter. Last quarter, we got 8.8% of stock-based compensation per revenue. That climbed to 10.2%. I'd like it to head back below the double-digit percentages, but that can happen two ways, right? One, they continue to make more profit than they did, more revenue than they did the quarter before, or they pay their employees less. So, back in Q2 of 2023, we paid out $75 million of stock-based compensation. That's now $61 million. A low of $55 million are roughly the same. I mean, ticking up quarter over quarter. We've seen it lower. This was the quarter where we added nearly 700,000 new members. So, customer acquisition cost was expected to drop this quarter. But year over year, customer acquisition cost is getting better. 318 to 287, awesome signs. So this is customer acquisition payback period, okay? This is saying, hey, if we're paying this much for a customer and they are bringing in X level of contribution profits, how long until we can actually cover the cost of bringing on these customers? Currently, that's sitting at 14.65, months for each customer that we bring on at $287 currently. I have a couple extra lines here just to sort of separate the success of the company on the bank side versus the technology side. So you can see their contribution margin if you're just looking at the bank, revenue if you're just looking at the bank, all excluding the tech platform. And then another couple interesting things is debit spend volumes. This is in billions of dollars. Okay, so 980 million. Now we're doing 2.25 billion, and the average SoFi member is spending, SoFi Money member is spending about $523 a quarter with SoFi. This is increasing from 363, let alone the amount of deposits that are also increasing. So all of this is very, very good. Okay. Non-interest expense. This is also very exciting. So year over year, technology and development up 4%. Okay. Sales and marketing went up only 1%, which I actually thought was very interesting. Cost of operations went up 16.85%. General and administration went up 10%. And provisions for credit losses actually went down 7.7% to a total amount of non-interest expenses rising about 6.56%, or about 97.44% of total revenue. Okay? Those are all the expense lines. Now, I'm going to rush through this very, very quickly because we do not have the 10Q for SoFi. So there's a lot of things that we do not have yet. We do see originations, which are just absolutely skyrocketing for personal loans. FICOs look good, all that sort of information. Same thing with student loans. You can see that here. FICOs. We don't have much of the other information just yet. Originations, FICOs, that sort of stuff. These aren't the exact number of sale of loans. This is just what they said they sold $1.6 million. 1.1 of that was personal loans, and the rest was home loans. So this is what I'm assuming. Anyway, I'll change that. We'll learn all this information and more whenever the 10Q comes out. But there are a couple other things that I did think were quite interesting. Warehouse facilities, we got to see. Customer deposits, their CD deposits actually decreased quite a lot. Although total interest paying deposits went up by only about $441 million. Whenever looking on just the total consumer deposits, they actually went up by 2.2 billion. But it's still important to look at all of that. Plus, average deposit interest actually went down quarter over quarter. And so did warehouse facilities, which is quite interesting. That cost of funding is actually heading downward already before interest rate cuts. But guys, this is a quick introduction to sort of the numbers that we look at and that we break down for these quarters to sort of help us understand SoFi and help us get better sort of predictions for the quarters ahead. Anyway, if you guys like this sort of video, make sure you guys like the video and subscribe down below if you want to see more content just like this. But bye for now.